You are 12 years old when you first notice that wealthy people rarely talk about money the way everyone else does. The adults around you discuss salaries, promotions, mortgages, and monthly expenses, as if financial life is a cycle of earning and spending. Yet the people who seem truly comfortable never mention any of those things. Their conversations drift toward investments, trusts, partnerships, and opportunities. You do not understand the terminology, but you sense a difference. Some people work for money, while others appear to organize their lives around systems that make money move on its own. Your entry into private banking begins much later, after years of education, networking, and proving that you can be trusted with information most people never see. At first, the clients seem surprisingly ordinary. They speak politely, arrive on time, and rarely display the extravagance that popular culture associates with wealth. The first lesson arrives quickly. Wealth at this level is not measured by consumption, but by optionality, the ability to choose where to live, what to own, which risks to take, and even how visible to become is often more valuable than luxury itself. You begin to realize that the richest clients are frequently the least interested in appearing rich. As you move deeper into the profession, you discover hidden rules that govern financial behavior among affluent families. Most people focus on annual income because income determines lifestyle. Wealthy families focus on assets because assets determine freedom. A successful entrepreneur may earn millions, but a family that controls diversified holdings across equities, bonds, real estate, private businesses, and alternative investments is playing an entirely different game. Conversations shift from maximizing earnings to preserving purchasing power across decades. Time itself becomes a financial instrument. Soon, you gain access to structures that most people never encounter. Trusts are established not simply to transfer wealth, but to shape behavior across generations. Family offices coordinate investments, taxes, philanthropy, legal affairs, and succession planning under a single framework. You learn that a significant portion of private banking involves preventing mistakes rather than chasing returns. A client with hundreds of millions of dollars often fears losing wealth far more than acquiring additional wealth. Preservation quietly becomes more important than growth. The deeper you go, the more you recognize that private banking is less about products and more about information. Wealthy clients gain access to networks that connect lawyers, accountants, investment managers, corporate executives, and policymakers. Opportunities rarely arrive as public announcements. They travel through trusted relationships built over decades. You begin to understand that financial advantages are often embedded within social structures. Knowledge reaches certain rooms before it reaches the rest of society, and those early insights can influence decisions worth millions. At higher levels, institutional mechanics become visible. Capital is rarely held in a simple bank account. It moves through holding companies, investment vehicles, partnerships, and carefully designed legal frameworks. Tax efficiency is treated as a discipline rather than an afterthought. Asset allocation becomes a complex balancing act involving geography, currency exposure, liquidity needs, and political uncertainty. You realize that much of wealth management involves preparing for events that may never occur. The objective is resilience. Wealth survives because it is structured to withstand shocks. Eventually, you encounter families whose fortunes have endured for generations. Their mindset feels almost foreign. They do not think in quarters, years, or even decades. They think in lifetimes. Decisions are evaluated according to how they will affect grandchildren who have not yet been born. Family constitutions establish rules for governance. Educational programs prepare heirs for responsibility. Philanthropic foundations reinforce shared values. Wealth is no longer merely capital. It becomes an institution designed to outlive individuals.